What is happening, Bitcoin Bulletin Crew? Get ready, because the crypto universe is absolutely exploding with activity, and you need to know what's going down. We're diving headfirst into a news cycle that's moving at warp speed, bringing you the updates that will define the next moves in the market. From massive corporate plays to critical market signals, if you're not plugged in, you're missing out. This is your essential briefing, the pulse of the digital asset world, and it's all happening right now. Don't blink, because we've got game-changing information that you absolutely cannot afford to miss. We're talking strategic acquisitions, market shifts, and expert analysis that cuts through the noise. Stick around, because the future of finance is being written, and we're here to break it all down for you. First up, we've got a major corporate player making another colossal move in the digital asset space. This isn't just a small addition. We're talking about a significant accumulation that could signal bigger trends. This company is doubling down, expanding its already massive holdings and showing unwavering conviction. What does this mean for the market's trajectory and future demand? We've got the inside scoop on this massive acquisition. Next, we're shifting gears to dissect a critical analysis that paints a stark picture of the current market landscape. Is Bitcoin facing a potential downturn, or is this just a temporary turbulence? We're breaking down the signals, the charts, and the expert warnings that suggest a precarious situation. Plus, we're looking at how other major digital assets are performing amidst this uncertainty. The details are intense, and the implications are huge. And finally, we're diving deep into what could be a pivotal moment for the market. An analyst is sounding the alarm, suggesting that a key asset is hanging by a thread. What are the specific price levels to watch, the on-chain data that's causing concern, and what does this mean for your portfolio? We'll break down the technicals and the expert outlooks. Make sure you smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Corporate giant makes massive digital asset purchase. In a move that underscores the growing institutional embrace of digital assets, MicroStrategy, now marketing itself as Strategy, has announced a significant acquisition of 3,081 Bitcoin. This latest purchase, made between August 18th and August 24th, amounted to approximately $356.9 million, with each coin acquired at an average price of roughly $115,829. The announcement was made by Chairman Michael Saylor via social media, characterizing the transaction as a continuation of the company's established treasury strategy. This bold move further solidifies MicroStrategy's position as a leading corporate holder of Bitcoin. The scale of this latest acquisition is substantial, bringing MicroStrategy's total Bitcoin holdings to an impressive 632,457 coins. This staggering amount represents approximately 3% of the cryptocurrency's total eventual supply, highlighting the company's deep commitment to the asset. The aggregate cost basis for this extensive hoard now stands at roughly $46.5 billion. Saylor further elaborated on the company's performance, noting that its Bitcoin holdings have yielded a remarkable 25.4% return year-to-date. This impressive yield demonstrates MicroStrategy's strong conviction in Bitcoin, even amidst periods of recent price softness in the broader digital asset market. This corporate interest in Bitcoin is not an isolated event, as evidenced by similar strategic moves from other entities in Asia. Metaplanet Inc., a company listed in Tokyo, has also expanded its digital asset portfolio, purchasing an additional 103 Bitcoin for approximately $1.74 billion, which translates to about $11.7 million. This acquisition increases Metaplanet's total holdings to 18,991 coins, currently valued at around $2.2 billion. Beyond direct holdings, Metaplanet's strategic positioning has also been recognized by FTSE Russell. In their semi-annual review, the company was upgraded to mid-cap status and included in the FTSE Japan Index. This inclusion is significant as it may direct passive capital flows towards Metaplanet's stock, offering traditional investors an indirect avenue to gain exposure to Bitcoin. The market's reaction to these large-scale accumulations has been largely positive, with many seeing it as a validation of Bitcoin's long-term value proposition. Analysts are closely watching how these significant corporate treasuries manage their holdings and whether their continued accumulation will influence broader market sentiment and price discovery. The trend suggests a growing acceptance of Bitcoin not just as a speculative asset, but as a strategic reserve asset for forward-thinking corporations. But is this corporate confidence a leading indicator, or are there underlying market pressures we need to watch? We're about to dive into a stark warning about Bitcoin's current market fragility. Bitcoin faces pressure as whale sells billions, Ethereum gains ground. Bitcoin's market has experienced significant downward pressure, dropping below the $58,000 mark as a major whale investor reportedly offloaded a staggering $2.7 billion worth of the cryptocurrency over the past week. This substantial sell-off has amplified existing market concerns regarding stability, particularly as capital appears to be rotating towards Ethereum, which has seen a consistent increase in inflows and on-chain activity. This dynamic is occurring at a critical juncture for Bitcoin, which has been struggling to break through a key resistance zone. On-chain analytics platforms have tracked the movement of Bitcoin from a high-capacity wallet holding over 100,000 BTC. Such large-scale movements from whale wallets are rare and often interpreted as significant shifts in market sentiment, potentially signaling a broader trend of selling pressure. The timing of this sell-off is particularly noteworthy, as it occurred while Bitcoin was testing a crucial resistance range between $57,000 and $59,000, a level it has repeatedly attempted to breach over the last month without sustained success. Analysts are cautioning that such prominent whale activity can often precede a more widespread sell-off among smaller retail investors, who may view these large outflows as a bearish signal, prompting them to exit their positions. In contrast, Ethereum has been capturing increased attention from both institutional and retail investors. Data from on-chain analytics indicates a notable 12% rise in Ethereum's daily transaction volume over the preceding 7 days. Furthermore, exchange inflows for ETH have surged to a 6-week high, suggesting renewed investor confidence and accumulation. This growing appeal for Ethereum is widely attributed to the anticipation surrounding upcoming network upgrades, most notably the Shanghai upgrade. This upgrade is expected to enable the unlocking of staked ETH currently held within the Beacon chain, a development that could significantly impact the supply dynamics and perceived utility of the asset. Despite the recent price dips for Bitcoin, the overall cryptocurrency market has demonstrated a degree of resilience, with the total market capitalization experiencing only a minor dip from its earlier peak. However, Bitcoin's market dominance has fallen to 42.3%, a clear indicator of a capital reallocation trend. Investors are increasingly seeking opportunities in altcoins, driven by the potential for higher yields and a diversification strategy away from Bitcoin's recent underperformance. This shift in capital allocation is also being influenced by broader macroeconomic factors, including ongoing uncertainty surrounding U.S. interest rate policies and a general slowdown in global risk appetite. The Federal Reserve's persistent hawkish stance has encouraged a move towards safer assets in traditional markets, a sentiment that appears to be influencing investment decisions in the crypto space as well, leading investors to reevaluate their exposure to higher-risk digital assets. Technical indicators for Bitcoin suggest that the downward trend could persist unless the asset can decisively reclaim the psychologically significant $60,000 level. Breaching this barrier has historically been a precursor to bullish reversals. However, the presence of substantial sell orders in the order books and a noticeable drop in open interest indicate that heightened volatility is likely to continue in the short term, presenting challenges for a swift recovery. This significant shift in capital and sentiment highlights a dynamic marketplace where diversification is key. But what happens when a major asset is described as hanging by a thread? Analyst warns of Bitcoin vulnerability below key support. Bitcoin's market position is currently precarious, described by a prominent pseudonymous analyst as hanging by a thread after it slipped below the critical $112,000 support level. This technical breakdown, coupled with concerning on-chain signals, suggests that the market may be facing increased downside pressure. The analyst, known as Ali, highlighted that while Bitcoin experienced a brief bounce from the $112,000 mark, this recovery proved unsustainable, with price action indicating further weakness. Ali's analysis pointed to price action from July and the previous session's wick, suggesting that $110,500 could serve as a potential interim support level. However, the on-chain data presents a more alarming picture. With the breach of $112,000, Ali identified a significant support gap extending down to $108,000, indicating a lack of demand to absorb potential selling pressure within this range. This technical vulnerability raises concerns about a potential sharp decline if selling momentum intensifies. Adding to the cautious market sentiment are recent outflows from Bitcoin exchange-traded funds, ETFs. Collectively, Bitcoin ETFs offloaded approximately 8,850 BTC last week, signaling reduced institutional buying interest or potential profit-taking. Concurrently, despite the ongoing price correction, open interest in Bitcoin futures has seen an increase. This rise in open interest, particularly when combined with a falling price, often suggests that traders are escalating leveraged long positions in an attempt to capitalize on perceived dips. Historically, such positioning can amplify losses when liquidations occur, exacerbating downward price movements. Looking at the immediate future, Ali emphasized that if the $110,500 level fails to hold, the $108,000 mark becomes the next critical level to monitor. On the upside, reclaiming $112,000 and securing a 4-hour closing price above $112,600 would be necessary to reverse the current bearish momentum and potentially open the path towards $115,000. In a contrasting yet complementary view, Gracie Chen, CEO of BitGet, offered a more balanced outlook. She anticipates that Bitcoin will likely consolidate within the $110,000 to $120,000 range over the next 1 to 2 weeks. Chen also noted that Ethereum appears to be exhibiting stronger performance, with potential targets between $4,600 and $5,200. She pointed to Ethereum's recent rally past $4,300, partly fueled by dovish comments from Federal Reserve Chair Jerome Powell, as an indicator of robust ecosystem demand and a potential precursor to an altcoin season. On-chain flows seem to support her perspective, with data indicating that whales are rotating capital from Bitcoin into Ethereum, thereby accelerating ETH's upward momentum. Chen concluded that Ethereum's growing utility and the continued inflows into Bitcoin ETFs position ETH to potentially outperform Bitcoin in the near term, even as Bitcoin maintains support from institutional demand. Audience impact. These conflicting signals have left investors on edge, debating whether to brace for further drops or anticipate a rebound. So, we've seen major corporate buying, a whale sell-off impacting Bitcoin, and now a warning about it hanging by a thread. What's the overarching trend? We're going to wrap it all up with a quick recap and a big call to action. MicroStrategy continues aggressive Bitcoin accumulation. MicroStrategy, a company that has rebranded itself as Strategy, has once again demonstrated its unwavering commitment to Bitcoin by announcing a substantial new purchase. Between August 18th and August 24th, the business intelligence firm acquired an additional 3,081 Bitcoin, investing approximately $356.9 million in the process. This latest acquisition translates to an average purchase price of about $115,829 per coin, a figure that reflects the company's strategy of dollar cost averaging into the digital asset. Michael Saylor, the company's influential chairman, disclosed the purchase on social media, reaffirming it as a core component of MicroStrategy's ongoing treasury management strategy. This latest transaction significantly bolsters the company's already considerable Bitcoin holdings, bringing its total to an impressive 632,457 Bitcoin. This vast quantity represents a meaningful portion of the cryptocurrency's total eventual supply, estimated to be around 3%. The cumulative cost basis for this extensive Bitcoin reserve now stands at approximately $46.5 billion. Saylor also highlighted the impressive performance of MicroStrategy's Bitcoin holdings, reporting a year-to-date yield of 25.4%. This strong return underscores the company's conviction in Bitcoin's potential as a store of value and a growth asset, even when the broader digital asset market experiences periods of price volatility or softness. The firm's consistent accumulation strategy signals a long-term belief in Bitcoin's disruptive potential. Beyond MicroStrategy, corporate interest in Bitcoin is evident across different geographies. In Asia, Tokyo-listed Metaplanet Inc. has also been actively expanding its Bitcoin reserves. The company recently purchased an additional 103 Bitcoin for roughly $1.74 billion, equivalent to about $11.7 million. This move brings Metaplanet's total holdings to 18,991 coins, currently valued at approximately $2.2 billion. Furthermore, Metaplanet's growing presence in the digital asset space has been recognized by FTSE Russell. The index provider elevated the company to mid-cap status in its semi-annual review and included it in the FTSE Japan Index. This inclusion is strategically important, as it has the potential to attract passive capital flows into Metaplanet's stock, thereby providing traditional investors with an indirect yet accessible route to gain exposure to Bitcoin. The market's response to these significant corporate acquisitions has been largely positive, interpreted by many as a strong endorsement of Bitcoin's role as a strategic corporate asset. Analysts are closely monitoring how these large holders manage their positions and whether their continued accumulation will influence overall market sentiment and price action. The trend suggests a growing institutional acceptance of Bitcoin, moving beyond a purely speculative asset to one considered for treasury reserves and long-term value preservation. Audience impact. This sustained corporate buying provides a bullish signal for many, reinforcing confidence in Bitcoin's long-term viability. But as we've seen, the market isn't just about accumulation. It's also about managing sell-offs and shifts in momentum. We'll explore these dynamics next. And that's a wrap on today's crucial updates. We saw MicroStrategy make another massive Bitcoin buy, a whale sell-off put pressure on BTC while ETH gained, and an analyst warned Bitcoin is hanging by a thread. It's been a wild ride. Don't forget to hit that like button, subscribe for more essential crypto news, and ring the notification bell so you're always in the loop. Also, follow us on all our social media channels for real-time updates and discussions. We'll see you in the next one.